A common question I get in my DMs and like WhatsApps is like that I'm a new trader who's just getting started and I'm losing a lot. So I always ask, what strategy are you using? And more often than not, probably 100% of the time, I always get the same response, which is I'm trading support and resistance. Let me save you a lifetime of misery, years of losses, years of tearing, of literally pulling your hair out. Support and resistance doesn't work. Plain blank, if there's anything you're going to get out of this webinar today, is that support and resistance does not work. Why? Okay, we'll get into why it doesn't work, but more importantly, why you should know that and why it's so important is because support and resistance, and I don't know who is telling people to use support and resistance. I remember when I started out, and yes, that was the most common thing. If you Googled, whether it was books, videos, it's the most common thing you'll hear, it's support and resistance. And I remember using support and resistance for a couple of months, probably like 1 or 2 months, and I realized this clearly was off and this isn't it. But it seems that a lot of people keep hitting their head on the wall and keep banging through and keep trying support and resistance when it's clearly not working. So there's good news and there's bad news to this scenario, because I'm gonna show you how you can change that and not use support and resistance, and why support and resistance is used. And it's so common. It's so common because it's spread by educators who, if you don't know, a lot of them have IB contracts with these brokers. They're not traders themselves. They make a lot of their money by not by selling courses. Sorry, my earpiece just switched off. So they make a lot of money by selling courses and by getting commissions from introducing retailers to brokers. So they actually don't even know how to trade. And so the simplest thing to tell you is to trade support and resistance. But if it was that simple, everyone would do it and there wouldn't be a 90% failure rate. So if there's a 90% failure rate and everyone's using support and resistance, isn't it obvious by just deducing that literally if you change from using support and resistance, which is why 90% fail, and you do something different, you join the 10%. It's that simple. If 90% are failing, 90% are using support and resistance, the most common sensical thing to do is to just stop using support and resistance. But somehow people keep using it because, educators is what they push. And it's what they push because it's what the broker wants. The broker wants you to use support and resistance, which they know does not work. So why doesn't support and resistance work? Let's just get into it. First of all currencies trade different. What I mean by that is they have different, if you think of it like different personalities or different temperaments, that's what currencies are like. They have different volatility, different temperaments, and some are more sensitive to news, some are less sensitive to news. So to use a blanket strategy like support and resistance is just setting yourself up for failure, and it's what the broker wants, because all supports will fail and they know you're going to get in. And trust me when I say institutions and even traders, when they say that the broker trades against you, they know everyone's going for the support and resistance. So it's clear to see that if everyone is buying here, all the broker needs to do is just sell. Let's just zoom in here. Let's just zoom in. Okay, so here's where we are, right? And okay, this is also interesting. When you're also trading support and resistance, I'm telling you now, you will get trapped in ranges, and you'll get trapped in ranges that will last for months. Look at this. If you're a regular support and resistance and you're like, okay, we got to this support and this huge spiking candle, if you can see, I'm not going to zoom in because I want you to see the whole picture. If you got into this support and you got induced by this huge spike in, it's obviously to induce traders. And then look what happens right after that. Price pulls back, stops everyone out. And then you wait, and you're like, okay, this is going to be the big moment. And then you buy in and it starts to move up, and now you're confident. You get tagged out again, or now you don't even put stop losses. You jump in again, you get tagged out, you jump in again. And so you end up being in a cycle where you just buy in and get tapped out, buy in, lose, which is why a lot of traders inbox me and say, hey, when I'm trading support and resistance, I'm losing. It's because you get in and then it looks like price is going in your direction and then it immediately goes against you. And so you'll do that for months and months and months and months. And then guess what happens? After 7 months, price goes in the direction that you thought it would. So you'll get trapped in a range. What will happen also is not only will you be trapped in a range like this one here, this is another range, right? So guess what happens? Institutions will immediately sell. Retailers are thinking this is going to go up because it's support. support always holds, and especially if this is the daily chart, because I know some critics are going to be like, no, support and resistance works if you use the higher time frames. It doesn't work. They know that you're all using support and resistance. So if you use support and resistance, look what happens. You'll be stuck in a range for months. And then after being stuck in the range, you will get it wrong. You'll think this is going to hold. Obviously, you think like, listen, this is clearly a strong support because it's been holding for the past 4 months. And then out of nowhere, suddenly price shoves against you. And then it's just a blown account. So that's something to be cautious of. And also, you miss out on some of the biggest opportunities if you trade support and resistance. And what I mean by that, hold on, let me just plug in my charger. Okay. What I mean by losing out on the biggest opportunities is this is the entry. This is a perfect entry right here. You get in here and you hold. You get in and you just hold. And then after these pullbacks, you're just adding a position. So you get in here at this range, at this trend. You get in here at the beginning of a trend, and you just hold. And then you add positions at these huge pullbacks, and you add in positions. And then if you just held on, look at that huge spike. This is before COVID. So that's what I mean by that. And so, simple strategy I use personally is it's a trend trading strategy after a market reversal. So what I mean by that is I don't trade support and resistance, but what I do is I look for market reversals, which is usually in the form of a pattern. So here's your falling wedge. This is your entry. Always wait for the break. What I mean by that is it's not enough to just say it's a falling wedge. They know people are trading falling wedges as well. You want to be careful. So look what happens at this falling wedge. Price all of a sudden shoves down, knocks everyone's stop losses, and then bumps up in the correct direction. So it's not enough for you to say, okay, I trade a strategy like mine, which is trend trading with market reversals, because they know you're going to do that. So obviously you identify the pattern, which is the reversal here, wait for the break, right? After everyone's been tapped out and price starts to go up, how do you know that? You go to the lower time frames, the 5 and 15 minute, you'll start to see the prices going up. This usually happens 3 a.m. in the morning, 2 a.m. in the morning. People are asleep. So prices shoved down, stop losses taken out. I think this used to be on my Facebook page where I used to post like early hours of the morning, and people will be like, why are you up in the morning? And I'm like, because I know this is what happens in the morning at 2 a.m., 1 a.m., shoving, hitting stop losses immediately, then going in the correct direction. And so this is the market reversal I'd wait for, keep going, keep going. And then once you get here, you ignore support and resistance, because then someone will be like, this is the take profit, right? You'd think that this is the take profit because this is resistance. No, 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 no. You keep holding. You keep holding and moving your stop losses up, up, and up. That's another thing beginners don't quite know yet, is that you're supposed to just literally just hold and move your stop loss up. Imagine you just get in here and you just hold, and you'd avoid all this support and resistance nonsense, and you just hold on. This is March when the COVID pandemic started. So the same story, market reversal, immediate market reversal here. This is the 8 moving average, and it's been holding since the beginning of 2019. So once it fell there, that's when you knew things were getting hot and it's time to get out. And I haven't been in this currency since then. This has been the entire lockdown period, entire COVID period. I should just label this the COVID move. So it's same thing. If you're using an 8 moving average strategy, I use the 8 moving average as well. Price was going down. You know it's time to get out and to just sell and hold. No support and resistance, you'll get tagged out and you'll lose. Again, this is a very interesting chart here. As you can see, this is a trend. This is a pair that moves in trends, right? Uptrend, 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 uptrend. This is a downtrend, sorry, downtrend. Bit of a pullback, downtrend. Support and resistance will not work here. This is another interesting one. Support and resistance clearly doesn't work in this pair. This is the US dollar yen. Look at this huge shove up and then this huge fall. This is within 1 month. Yeah, this just breached all support levels and support resistance. Even if you drew these, let me just show you here. If you drew these as support and resistance, it clearly shoved all of these within 1 month, right? So I just used this downtrend movement to draw these support areas right here. Look what happened within 1 month. Within 1 month, it just shoved through all of them, even the top ones here, just shoved through all of them, spiked up again, and then slowly came down. And as you can see, you can't even predict with a pair like this where support and resistance will be. This is a clear uptrend. As you can see, you'd literally be tagged in and out and just lose all your money if you try to trade support and resistance, because this is a New Zealand US dollar. It trades it does really, really well for trend traders. So you really need to know what strategy are you trading, and support and resistance is not a strategy. That's another key point to get out of this. If there's anything else you'll get out of this, it's that support and resistance is not a strategy and you should not be trading it. This is clearly a pair for a trend trader. You need to find pairs that fit into your strategy. Otherwise, you're just wasting your time. So, like this New Zealand US dollar one is clearly a trend one. And so, if you're doing support and resistance here, you'll get killed out. It's like what I said with at the beginning of gold during March and the lockdown, where I said that like if you're gonna be a day trader, you're gonna get wiped out of gold. Because it's a safe haven. Gold and the yen pairs are known safe havens. Why are you trading gold? You should be investing because it's a safe haven, right? So clearly we're done with that. Support and resistance would not work here. So remember to match your strategy with pairs that work well with it, which is why back testing is important, which is why experience is important. You should always keep going through your charts and get to actually know how the pairs move, right? If you know how the pairs move, and that just comes with looking at your charts, spending a couple of minutes, 30 minutes every day just looking at the charts clearly like this, you get to understand how pairs move, and then you get to use the strategy that works well with the currency pair. Again, look at this. Support and resistance clearly would not work on a pair like this. Look at this huge shove up, shove down here. Clearly no respect. And then sometimes it just ranges here. No respect for support and resistance. So that doesn't mean that applies for all pairs. There's some pairs which respect support and resistance. The common ones I know and the easiest pairs I know is the US dollar rand and the euro rand, and also gold. Those are three pairs which are really, really good for support and resistance traders. But everything else, remember, support and resistance is not a strategy. You will lose if you try to use it. The broker wants you to use it because they trade against you. When you are buying, they're dumping orders because they know everyone is buying, and they're just going to hit your stop losses. And another thing is to match your strategy with the correct currency pairs. If you don't do that, you're just wasting your time. Remember, match your strategy with currency pairs which are favorable to your strategy. Otherwise, you know, you're just trying to force a strategy up. And that's a misconception, which is that you'll have one strategy and applies to every single currency. It doesn't work like that. I suck at the euro pairs. Everyone knows I suck at the euro pairs and the US dollar pairs. I stay away from them because I know I'm no good at them. My strategy does not work on them. So you should also know which pairs are yours, which pairs you just leave alone. You don't have to trade everything. You don't have to have a variety in what you trade. And so that's just a quick webinar I wanted us to go through.